Hey everyone, happy Wednesday, and we hope that you had a really Merry Christmas and enjoyed some downtime with friends and family, despite the chaos that often surrounds the holidays. My name is Erin Nitschke, and I'm here with my friend and colleague, Beverly Hosford, and we're with the National Federation of Professional Trainers. And we are here today to talk to you a little bit about tax tips for personal trainers or independent contractors, fitness professionals in general. And we do have an incredible expert, Bev. I think she's an expert on everything, but she would probably argue with me on that. But she has been an independent contractor for a long time. And so she's got a whole slew of experience with taxes and what you can write off and what you can't and how to get organized. So she is here to help share some of those tips today. So if you are joining us, please tell us how you're doing, where you're joining us from. I'm in Wyoming, a very snowy, cold Wyoming right now. And Bev is in Montana. Bev, how are you doing today?
I'm pretty good. I'm getting over a case of the grumpies from this morning. But
yeah, we all are.
I'm better now after a little happy hour chocolate, and I just saw the screen froze a few times. Sorry about that. Not really sure what's going on there. Tech issues.
Yeah.
Grumpy about it. So yeah, I'm doing pretty good. I'm glad to be here and to talk about this topic that is like, maybe that's why I was grumpy this morning. My husband was like, "You're talking about taxes today. That's probably why you're kind of grumpy." And I'm like, "No, I love numbers. I really do." But it is not like the most sexy topic. I totally get it. But man, when that money is coming in and you're saving more, I feel like then we all love it.
Yeah, that's true. I think that's the hard part is you got to do the work and get organized and know the game plan. And then you see the payoff and you're like, "Oh, this is so nice. I have money."
Yeah, we all love it when we have the money, but keeping track of it is not always so fun.
No, and I think when you're first starting out, it can be really difficult. And Bev actually wrote a really great blog post about this, about how to get organized for taxes and just general tax tips. So maybe you can pop that in the comments for people to check it out. It's really well organized, and I think it covers so much of what we all wonder. I mean, I haven't been an independent contractor for all that long, and really when I sit down to look at the tax information, I kind of just glaze over. I'm like, oh, this sounds like something I'm never going to be interested in because there's so much like technical jargon to it that I think it makes it really difficult to kind of sift through. So I love the way that you have simplified some of that language for us, and we'll share that with us today. So
yeah, I popped the post into the comments for anyone that likes reading instead of listening, and we're going to kind of cover what's in that post. And then also I popped our post from last week in. So last week we talked about bookkeeping and financial foundations, and I feel like that is the place that you really want to start. And if you're at the end of the first year of being an independent contractor and you're just trying to scramble because you've got to do your taxes, just do your best and then go back to the bookkeeping and financial foundations for January 1st, because January 1st really is the day to start those new habits and to start implementing those. And then at the end of next year, it'll be a whole new ball game for you. Like now's the time to like do the cleanse or whatever and start fresh. It's such a perfect time for it. And even if you don't start till like the second week of January, that's fine. Or even at the end of January, you can still go back and track January, but just don't let yourself get too far into February without laying those foundations, which some of them were keeping track of how many sessions you're doing every week, figuring out how much money you're actually making with each session, and starting to keep track of your expenses. You can keep track of personal expenses so that you know how much it costs for you to live. And then you can keep track of business expenses, which we'll talk about today for taxes. And those were I think those were most of them. Erin, did I miss anything from last week?
No, I don't think so. Yeah, we really hit home on making sure that you've got some sort of tracking system, whatever that is. I mean, Bev, you mentioned that you're kind of old school, as am I. Likes the Excel or likes your tangible planner versus something that's a little more electronic or an app-based. And then we did talk about figuring out how much money you are rolling in every single week and then month, and then how much you're actually delving out to cover just your general cost of living. I mean, your utilities, and if you've got, an entertainment budget, things like that, because it costs a lot. And if you don't have those numbers organized, then when you continue to track for taxes, you're going to be that much further in the hole in trying to dig yourself out of something that's already kind of confusing. At least it can seem that way, I think, on the surface until we dive into it.
Yeah, totally.
Yeah. So if you are joining us today, what tax tips do you have? Maybe ask a question or list something that maybe you found confusing or that you're wondering about, and maybe we can tackle those later on in the show.
Totally. And Billy says he's at headquarters and Burr, it's 5 degrees.
Yeah, I feel you, Billy. It's chilly here. I don't even have my blinds open. I don't really want to look right now. It just looks completely frozen, like it's Narnia or something out there. So, well, let's get started. So one of the things that I really appreciated about your approach to talking about this topic just in your blog was talking about a game plan. Get your game plan together. So tell us a little bit about the methodology you use to get organized for that tax season. Is it something that you do, April 1st, or how do you get yourself organized?
Totally. Yeah, I'm old school. I like having folders and I like to have fun with it. I have lots of different colored folders, and all year round, I just put receipts in those folders. Like I said last week, I just like to print out receipts every time I buy something, or like if I buy an online course, I print that out and it just goes right in the folder. And you could also do that with a spreadsheet. Every time you buy something, just put it into a spreadsheet and keep track. The thing is, you need the proof in case you ever get audited. So however you want to have that proof, you need those receipts somewhere. So I figure, why not just stick them in folders? And then I have a folder for each category, one for education, one for clothing if it applies to you, one for office space is actually quite simple, which we could talk about today. But I have a one for food, because you can write off 50% of meals usually if you're having a meal around, like if you're taking a continuing ed course or you're meeting with a colleague. So there's lots of different categories. And so I like to do that. And then I have another spreadsheet that I keep in my computer that keeps track of all the sessions I've done. And, at the end of the year, if you're an independent contractor, you would know this because you're getting a 1099 form, or you're filling out a 1099. If you're filling out a W-2 and you're getting a pay stub that has your Social Security taken out of it, you don't need to do your own taxes. But if you are getting a lot of fitness instructors get a W-2 from one place and a 1099 from another place. And I actually get like 5 different 1099s. And then if you're seeing clients in home or you're doing anything on the side, like I take business coaching clients, so I need to keep track of that myself because nobody's going to give me a 1099 for that. But if you're taking, I think, more than like $600 you need to report it. And so I keep a spreadsheet with that information and report it. And the reason I keep a spreadsheet with all those other ones, even though I'm not. So you get your 1099s at the end of the year, but ideally you're paying in quarterly taxes, because the worst thing that can happen is you get to the end of the year and you find out you owe like 10 grand or something, or even 2 grand, whatever it is. It sucks to find that out. So I keep track all year round, and every 4 months or 3 months I pay it in. And so I would just keep track of everything. I have one spreadsheet that has it all in there. It's like, even if I'm going to get a 1099, that way I know if I made $5,000 in the first quarter, then I just take 25% of that and I just send it in. And you can get what's called estimated payment receipts from your accountant that average it based off of the last year. That's another way to do it. But so the last 3 years, my income changed so much because I moved states. I changed my whole business around. And so even if you get that from your accountant, you still might owe at the end of the year. So I always like to pay in more than I'm supposed to. That way I don't get caught at the end owing money. And so that can be a little tricky at first, but it's one of those habits you just have to get into with keeping track. So hopefully that makes sense. If you guys have any questions about how that works, there's all these different things. And the base of it is just to keep track of the money that comes in, the money that goes out. And I do that with an Excel spreadsheet. I have one that's everything coming in and one that's everything going out. and I have labels for each category, and then it makes this little pie chart, and then I can see exactly what's going on and find it. And I think QuickBooks is probably a much smarter route to go, but I've been using Excel since I was like 16 years old. And so after, oh my gosh, like 20 years of using it, it's just kind of hard for me. What kind of tracking system do you use, Erin?
I actually use Excel as well, but we do have QuickBooks because Mark does a lot of independent contractor work with his own graphic design and web design business. But I'm old school. Like, don't. I can only handle so much change at once. Don't uproot me. And our businesses are completely separate. So he has his own thing. I have my own thing, but I do the same thing. And I do have some organizations that I write for that pay me through PayPal. And so I'll take 25% of whatever they pay me and just save it right there in that account. And then I transfer the rest of it to my business checking account, just so that I can prepare. I would rather shave off a lot on the top and just live conservatively and then deal with taxes. Because the last thing you want, like you said, is that gigantic surprise of what you owe, and you're like, oh my Lord, I didn't save that. Absolutely live conservatively and knock off immediately 25% from whatever you're bringing in, just so you can save that, because the government's gonna want their money. So
yeah, they're smart. I mean, I'll never forget, my dad bought me a book called Automatic Millionaire when I graduated from college, and in that book, David Bach talks about paying yourself before you pay anyone else. And so, because the government takes their money first and foremost, and that's why the government started doing that, because when they used to collect taxes at the end of the year, or like when they used to collect taxes after the fact, it didn't work out very well. So like with W-2 employees and with most people, you have to pay ahead of time, and because they learn people run out of money. And David Bach says the same thing about yourself, like pay yourself first. So like before you go on a shopping spree or you travel, like we talked about last week, build up that fund, the emergency fund, and just pay yourself first, or open a retirement fund. And that's like a whole nother can of worms. But that was something I did as soon as I started breaking even with my business. I opened a retirement fund and I started putting like $25 away each month and built myself up to the max, which is like 500 something a month. And it's just really smart. Yeah. To pay yourself and pay the government. And then whatever's left over, you can play with.
Yeah, it might be $6, it might be 65, might be 600. You just never know. But that's the point. And I think just one thing, if you are somebody that is joining us or watching this later and you are just starting out, know that it's not uncommon to not turn a profit in your first year or even in your first two. So don't think, oh my gosh, at the end of that year, like, I'm not going to make it, I suck, I'm going to give up. Don't do that. Give yourself some time. Like, all great things take time. And I see that a lot, even just with former students trying to start out and they're frustrated. And I'm like, I feel ya. It sucks having to be your own boss, but it's also got a lot of really wonderful benefits too.
Yeah, it will. Just hang in there for sure. I love that you point that out. The first 3 to 5 years can be a rough ride. And it's not that sometimes you have to spend a little money on that credit card to get the clothing that you want to wear, to portray the image that you want to portray, to attract the clients that you want. And it is absolutely okay as long as you have that long-term plan in place, as long as you know where you're heading and you're committed, and you're not just spending frivolously. And that's where having a business plan or strategic plan can be really beneficial.
Yeah, absolutely. And I think you kind of touched on this already, but because you mentioned the W-2 and the 1099, but I think one of the questions people ask a lot is, how do I know if I need to file my own taxes? Like, how am I going to figure that out?
Yeah, definitely. It's just straight up, when you start a job, the employer is going to give you a piece of paper to fill out. And if you forgot what that was because you filled it out in February and now it's December, just go and look at, you're either getting a pay stub every 2 weeks or every month, and you have all these pay stubs, or you're getting a direct deposit of some sort, or you're getting at the end of the year. I mean, I guess the thing is I was a 1099 employee, but a 1099 independent contractor, but he paid us every 2 weeks. So it's kind of a unique situation. Yeah, it was really interesting. So the clients paid him and then he paid us. And then at the end of the year, we had to claim our own taxes. It was very interesting. Instead of the clients paying us and then us paying him. So like the most important thing is at the end of the year, you just need to definitely watch the mailbox for those 1099 forms. And those are the ones that you have to pay taxes on. And then your other employers are going to give you a W-2. And the thing is though, is that if your address is incorrect or something, you may not get those forms in the mail. So I would sit down and make a list, like who is everyone that you get money from right now? And then at the end of the year, make sure you get a piece of paper from each of those people. And if you don't, contact them and find out, like, did it go to the wrong address or what happened? And then you're also looking for papers coming from your financial institution, because if you have a savings account and you earn interest, you need to report that. And if you have a retirement fund or a trust fund or a health savings account, that all needs to come in. And that's why having an accountant can be really helpful. Yeah, I feel like it's intimidating to spend, anywhere from $150 to $500 on an accountant, depending on what kind of business you have. But I feel like it's totally worth it, because that accountant can probably save you their exact fee, like especially your first year or two. Like by the time they're done combing through everything, they're probably going to save you the amount of money that you paid them, and they're going to teach you some habits to take into the future.
Exactly. No, really good point. And I did see one comment pop up, I think.
Oh, let me see. I see questions. John Bates, it depends on how you set your business up. Do you have a facility? Or are you going to clients' homes? I've been in the business for over 35 years. I've opened my own facility 6 years ago, and it took 4 to 5 years to really turn a profit. Having overhead really makes a big difference. Absolutely.
That's valuable words from someone that is clearly experienced. John, thank you for sharing that with us. Because it absolutely makes a difference how you set up your business. Is it a sole proprietorship? Is it a corporation? Is it an LLC? How many business partners do you have? So that's a whole other show. That's a whole other can of worms, but such a good point to keep in mind, because I think sometimes when people are setting up their business, they're like, well, how do I do that?
Yeah.
It's a legit question for sure. But again, John, thank you very much for sharing that. That's really sage advice.
Yeah. The most common scenario is that a trainer starts seeing clients at their home or in others' homes or at a gym, and they're just not really thinking about the taxes. And at the end of the year, they realize they've got to pay these taxes. And you can get an extension if you're kind of having like a freak out moment. But I would say if you really are totally lost, I can't recommend highly enough to hire somebody, get somebody, or do a trade. Find an accountant that trades can be a little tricky financially, especially with accountants, because they know the rules. So like, don't just like give them free training and they give you free accounting. You pay them, they pay you, and then it evens out.
Yeah, I absolutely think I think when you're dealing, it's one thing if it's your personal taxes and maybe you don't have a lot of, your income to debt ratio is a little bit different, or you don't have a lot of expenses, like you don't own multiple vehicles, maybe you don't even own your home. But when it comes to the business side of things, I think, Mark and I have an accountant too. And she's like God to me. I mean, she knows, she's been in the business for, I don't know how, 30 some years. And man, she knows where to find those deductions and those write-offs. And I think there's some trickery with it. Like, you have to know where to look. So I absolutely think, yes, please look at hiring an accountant as an investment and not an expense. Yes, you're going to pay the money, but in the end, it's probably going to save you a whole lot more than you would be able to save on your own.
Yeah, and it's generally a write-off, and that's where I like to mention to trainers or fitness instructors that's the fun thing about owning your own business. You can pretty much just make the assumption that you're going to save 20 to 25% on anything you spend for your business, so if you're buying a $100 CEC course, all right, it's an automatic discount, $75.
Yep.
Just because you saved that receipt, you made $25, and just because you reported it. And it's not an absolute. I'm not saying like exactly 25% off, but it depends on your tax bracket. And tax bracket's based off of how much money you earn. And so it could be anywhere from 18% all the way up to like 30%. Mm-hmm. But yeah, that accountant right there, if they're a $200 accountant, take 25% off, $150 now.
Exactly. And I think, you bring up a really good point here. And it wasn't even a question or a comment I was even thinking about as we were preparing for the show, but you have to change your paradigm, like your thinking mechanism, as opposed to how much is going out. It's like how much is being saved. And I think that is a really hard mindset to establish and grow, because you're so focused on remaining in the black and not the red. And looking at that bottom line, like, oh my gosh, I only made $12,000. Like, what the heck, But it's like also shifting that mindset so that it's like, wow, I can look at that $500 CEC course and boom, I get this big chunk saved. Mm-hmm. And that's a different mindset going into it, because that's just not how we're taught to think when it comes to money in versus money out. It's not about money saved. So I think that that's a different method of thinking.
It is a different mindset. That's a really good point. It's kind of like when you have a child. It's like the whole paradigm shifts. The way you look at everything changes.
Daily.
You thought you weren't going to let them have any toys, or you thought you weren't going to let them watch TV. It's just like when you own your own business. You think, I'm going to own my own business. I'm going to take off all the time I want, or I'm going to, travel whenever I feel like it. And it's okay that all those things you thought don't come true right away. And I think having that's why it's so important. Like we had a blog post this morning on our site with the trainer advice from the year from all of our top trainers. And almost every single one of them says, like, get into the field because you're passionate. And it's like, you've got to really love what you do. And the reason for that is so that you're committed, and so you're going to stick it out, because things like taxes can really just throw you right off the horse in the first place.
For sure. And when it comes to reporting taxes, so here's just an example that I would run into a lot with former students just starting out on their own. So what happens if they were to, like, say they were asked to give a workshop? Something like that. So they go into, say, the hospital, and they give a lunch and learn that's an hour-long workshop, and they do that for maybe as part of a hospital wellness program, employee wellness program. How would they approach that situation with reporting?
Oh, so they give a workshop and then people pay them for it?
So like the hospital would contract with, like, hire them. Hey, would you come in and run this workshop? It's going to be during these 2 weeks of January for 5 hours a week over the lunch hour for those 10 days. And we're charging X amount for people to come and participate in this, and you get X percent of how many people participate.
Yeah. That's a nice gig. I like that gig.
Right?
I think that's something you definitely have to iron out with them before you even go in, because they might be writing you a check straight out, and then you have to ask them, are you going to give me a 1099 form for this? Because it really depends on how the hospital does their taxes. They might consider every person that gives a workshop under one umbrella, and if they spend more than $600, like I was saying, they might consider you part of that umbrella, just depending. And so they might be planning to issue you a 1099 at the end of the year. Either way, you're going to have to report those taxes, because unless that's the only gig you did all year and they don't give you a 1099, then you may not need to report it. But that's where it gets hairy. And I think that, just knowing ahead of time, are you giving me a 1099, or are you writing me a check, or what's the deal? And then if that's like, if you're making like $500 from that gig, you're kind of on the borderline of reporting it. If you made $100 somewhere else that year, then you're definitely going to need to report it. And then at the end of the day, I don't even know how fine lined that rule is, because I am not an accountant or a bookkeeper. Right. So I don't stay up on those laws. I just know that, like, that's the number that everyone throws around. And I just generally, now I'm like, I just report no matter what. I'd rather pay the 20% and then not get in trouble later.
Right. Because, you had mentioned audits earlier. And maybe before we get into that, let's talk a little bit about what things you can claim.
Yeah, definitely.
Things like mileage, your general expenses. So talk a little bit about that if you want.
Yeah, so I always think of my filing folders because they're alphabetical. So we start with advertising. So advertising that you do, like business cards, flyers, website. I have a Vimeo account for my online anatomy course, so that's a write-off. I use Dropbox to transfer files with my coworkers and to transfer video files with students that buy my courses. So I write that off. That's all to me like advertising. And some of it may just be like general business operations. So you could have for B, business operations. And then let's see, so I think through all the alphabet letters, there's M for meals or F for food. Like I said earlier, if you're out on a continuing education workshop weekend, and you can generally write off all those meals, but you can only write off 50% of it. I don't think you can write off alcohol. I'm not really sure. That's another thing to check with your accountant. Or if you're going out to lunch with a client or something. Something I've written off in the past under like G would be gifts. Like if I give clients gifts.
Oh, yeah.
You know, if I'm buying gifts for my clients, that's kind of a marketing expense or an advertising. And you can go A for advertising or M for marketing. I'm just thinking through my file folders. There's also, I have a donations. You can write off part of your, if you like donate clothing or you donate to a charity, that's another thing that you can write off as a business owner in general, depending again on your situation. And then we've got C for clothing or uniform under U, whichever one. But so uniforms and clothing can be tricky. Generally, you're supposed to have your logo on it for it to count. So, but it just depends, again, on who your accountant is and how lax you are. Some accountants will let you write off any clothing you buy for fitness, but just know you can't like go out there to Lululemon or Patagonia and spend $1,000 on like workout clothing and write it off. It doesn't really work that way. And I think like if you're going to buy sneakers and write them off, they have to only be used for work. And it can just be a fine line. And then it just depends it just depends. Like if you ever get audited, how are you going to prove that to the person, you know? Because if you get some snooty tax person auditing you and they're like, prove to me that you only wore these sneakers to work. It's like, ugh. And then they go on Facebook and they find photos of you like out in, you know, Mexico wearing your sneakers on vacation. I mean, it's like very unlikely that's ever going to happen, but like nobody can deal with that. So just keep it simple. So uniforms, continuing education would be up in the C's, or taking courses. So anytime you take a continuing education course, or if you're in college, that's definitely a write-off. And let's see, I talked about websites already. I'm thinking about the other end of the alphabet here. There's office space. So if you have an entire office in your house dedicated to your business, you can take the square footage and then you can multiply it by the rent that you pay, the utilities, or by your mortgage and your utilities. And so like say your office space is 100 square feet and your house is 1,000 square feet. That means 10% of your overhead for living can be written off. And that's, you know, if sometime, and it's supposed to be only used for office or only for work. If you're using that desk space to do like Pinterest or vision boards or something, then the percentage should be lower. Then you're supposed to technically like log how much time for each, and it can get really nitty gritty. And then there's going to be mileage. So if you're driving to and from your job, there's a lot of stipulations though around this. You'll definitely read the blog I wrote about mileage, because you're going from your home to your business. You have to subtract that from the mileage. You can't just like log from my house to my gym and then from the gym back to my house. And then if you're going to a client's house, you're supposed to either go from your house or from the gym. And it gets really nitty gritty there, where you want to make sure you're doing that properly. I always kept an old school mileage log in my car where I just recorded every trip all year long. And then I recorded how many miles. And then at the end of the year, I would just go in and add that up. Because there's two ways to do mileage. You can either take the standard deduction, which is like 55 cents a mile, or you can take the percentage that you used your car for work versus the percentage that you used it for pleasure or for personal. And then you take that percentage and then you multiply that by all your expenses for your car, your oil changes, your insurance, your gas, but then you got to keep track of all of that. So I always went with the how many miles and then 55 cents times that, done.
It's a lot less complicated that way, because I mean, vehicle maintenance, I mean, you've got tire rotation, oil change every so many thousands of miles. And but that's where my mind starts to go, What did you say?
And if all of this, again, all of this sounds overwhelming, like that's why this year just start keeping track of everything. Just like you keep track of your clients' workouts and your clients keep track of their food journals, or you keep track of calories. Just start keeping track of everything, and then it'll just become a habit. And so, and then you're looking back on this year and you're like, man, I want to write off mileage. You could probably sit down and figure it out. It's not too late to sit down and look at your odometer. Maybe like your last oil change was like in January or February, and you could figure out like how many miles you did this year. And then you could probably figure out the distance from your home to your job and figure out how many days you went to your job this year. And you could do all that math, and you might end up saving like a few $100 for doing that. So I always say it's worth the hour that it takes. It sounds icky, but if you can make $200 for an hour of backtracking,
I'd do it. Yeah, I'd do it.
I'll do it.
Awesome. Another write-off question. So what about music? What if what if you're a group fitness instructor, or even, a trainer, and you download some iTunes, or, how does that work?
Yeah, I mean, you can definitely write that off again if you're only using it for business. The tricky thing is if you're a group fitness instructor with a W-2 and you're a personal trainer with a 1099 and you're using the music for both, then technically you're not supposed to write it off, because the W-2 you're not allowed to write off for. And so then that's where the accountant might say, well, I'll let you write off 50% of it or something, because you're using So yeah, that's a really common one where a lot of personal trainers and fitness instructors are hybrids. They do a little fitness instructing.
Yep.
And so yeah, music is one, just like the uniform, where it's like, I use my uniform for work, but I then go on a hike after work with it. So
yeah, it could be a red flag. Okay, that's good. And I was just thinking about other workshops too. As personal trainers, we can certainly do things like take our clients to a grocery store and give them a grocery store shopping tour. We can do cooking demos with them. So say we buy materials for that specific exercise. Say that's something that you do with every client. It's part of your package or whatever. So can you claim the food, the pots and pans, if they're dedicated specifically for your business? Like, how does that work?
Ooh, yeah. I mean, if you have like a cooking kitchen that's only for clients, but most of us are pots. So, but yeah, like the food, definitely. And here's my thing is just keep track of everything, like keep all the receipts. And then if you were ever audited and the person is like, I don't think that this qualifies, then they're just going to make you pay it back. And that's my thing with being organized. I feel like if I was ever to get audited, the person auditing me is going to be like, wow, she's really organized. All right, let's make this quick and get it over with. But if they come in and it's a disaster and like, you've got like monkeys running around your house or something, it's just like they're then going to scrutinize you to the bottom line. Because I've heard about a few auditing situations where the accountant comes in, or the auditor comes in, they see you have everything organized, they look at a couple of the sketchy categories like clothing, and then they just move on, and that's it. So just keep track of everything. Yeah.
Yeah. It sounds like, you can't be too cautious, I guess. I mean, not in a negative sense, in terms of keeping track of just making sure everything is locked up tight. Like, don't give them a reason to audit you.
Yeah, basically.
And yeah, that's really good advice. Specifically about the mortgage and having a dedicated office space. That's what Mark and I have. He's got his side, I've got my side, and we only use it for business. And we do have a space downstairs that we use for Pinteresting, or, just like our hobby room that we'll go and do things that are completely unbusiness related. But yeah, in terms of resources that are available out there, do you have any? You mentioned one book early on, The Automatic Millionaire. Do you have any other like go-to sources that you have found particularly helpful?
People that make good money.
Yeah, like Warren Buffett.
Yeah, I mean, I try to surround myself with people who have similar habits to myself. So I've learned a lot from other people who have savvy finances and who run their own businesses. I have a lot of business owner friends. I used to run a networking group for female business owners in town until I had my baby. And just being around people like that, I feel like that's where I get the resources I need when I need them. But I don't really have like a list or anything. I love David Bach. I've liked Susie Orman in the past. She always has, especially because Susie gets into mindset. I feel like money mindset, like you said, is the bottom line. You've got to respect money. I remember, Marie Forleo is one of my favorite business mentors, and she talks about how if there's a penny on the ground, she picks it up because she has a high respect for money. And she's like, yeah, it's partially because I'm cheap, but like this thing about like, it's true. Like you look at that penny on the ground and you're like, oh, it's just a penny. But like, she's like, I pick them up because that penny is valuable. And I want my relationship with money to be really respectful. Like it's not just a penny, it's a penny. So there's I think it's really great to get your mindset straight. And then
that's a great perspective. It really is. And what a great thing to teach your children too.
Yeah.
As a mom, like my mind is always like, oh, what can I teach Olivia out of this conversation? But yeah, like respect money, and so that you end up understanding the value of things versus, what they cost, and being less material in that respect.
Yeah. My philosophy really is just to be a little tighter and be a little more conservative. And then when you want to step out and go buck wild, like after I gave birth, I waited like a year until my body kind of got back into shape. And then I'm like, I'm going to go spend a bunch of money on some clothing, but I kept it tight all year. We had a new child. We're still trying to learn about the finances. And then it's like, it doesn't hurt to go and have a little shopping spree because I was, tight. And then it really means something. And that's kind of how my husband and I operate, like even as parents, like we try to keep our son on like a routine and kind of keep him regimented. And that way when we want to like go off the routine, it's really easy to come back to it because you have that foundation and you have those rules. Like we sit down and we go over our budget every month. And right now we're 2 months behind. We haven't done November yet and we need to do December. But like all year we've been on track with that. And so when we sit down now, we're gonna have to do 2 months, but it's like, it's just nice to have that routine in place, just like with exercise. Like you have your regular exercise routine, and then if you fall off of it for a week, it's easy to get back on again.
Yeah, I think that's a perfect example, especially as we're trying to communicate with fitness professionals and personal trainers. Yeah, it's very easy. When you build that foundation, it's, very easy for you to return to that habit that you built. Like I took 3 days off at Christmas and didn't feel the slightest bit guilty. And it was easy to get back into it. It was like I missed it. So yeah, it's I think that's a really salient point that a lot of personal trainers and fitness professionals will glob onto for sure.
Yeah.
Yeah. So I've seen a couple comments pop up. Let's check those out and see if we have any questions. I just don't want to forget about them. And since I can't control that part.
John says, this is such great information for trainers. What I found in this business is there are great trainers who know their trade, but don't know how to run a business or how to market or sell their services. Find a good business mentor who is successful and willing to help you. There's so much more than knowing how to train a client. Yes. Thank you, John, for tuning in. Where are you located? I'm curious. Yeah. Billy says, death, taxes, and childbirth. There's never a convenient time for any of them. Margaret Mitchell.
You know what? That's a fact.
John says, with the software that have today, most people can find a cheap bookkeeper that helps you out. Most small businesses don't really need a CPA. Costs versus benefits are not justified. Yeah, definitely. You don't have to spend a ton on an accountant. You can spend as little as like $50 to $75. And John says, get a company logo on your clothes that you write off. That makes it a uniform. Lettering and registration of vehicles in the company name makes it hard to dispute. Mm-hmm. And John also says, Bev, if you wear a uniform out and about, isn't that marketing? Yes, as long as you don't try to go too far. For most write-offs, don't get flagged. But if you start writing off meals as business meeting, then it starts looking fishy. Yeah, definitely. I think, again, if you have a logo on your clothing, it's a no-brainer. It's that like buying Lululemon or and not having a logo put on it and then wearing that out. So yeah, I think if you have the logo, definitely I would call that marketing for sure. And Myra says, this is so valuable. Thank you, ladies.
Thank you, Bev. I just asked the questions.
Yeah, I think I already mentioned, like, I'm not an accountant, so don't take any of this as hard evidence. This is just us trying to like open your mind, maybe calm your nerves, hopefully calm your nerves a little bit. Like it
can be done.
It doesn't have to be so scary. Like we talked about a lot today, but hopefully just to motivate you to keep track and know that we're here if you want to like panic a little, and we'll tell you it's going to be okay. And and encourage you to find somebody to help you. You know, $100 in the big scheme of your business is not that much.
No, and I love the point that John made about you can be a really great trainer. You can really know your expertise, but if you don't know how to run your business, the chances of success are going to be very, very low. So you've got to build that foundation. And that's one of the things that I found to be in college curriculum, you know, at least from my own experience, that was one thing that we entered. We specifically changed the curriculum to include entrepreneurship and basic business management for our personal trainer certification program, because that's not an exercise science-y knowledge base. So you're not going to go through a bachelor's program and end up with a business certificate. You've got to have that basic knowledge. And that's one thing that I felt was missing from my own education. So I've tried to, like, over the years, learn this stuff. So don't take it for granted. It's something that you need to build in, I think, to your CECs too. You know, what's new in business? What tax laws have changed? You know, what are the better tracking systems out there? You know, anything that makes you get your life together just a little bit more, totally worth it, in my opinion.
Yeah, definitely. Just like learning about food. The more you learn about food, the better you can eat. And the more you learn about exercise, the better you can train. The more you learn about money, the more of it you can make.
Yep.
Here we go. That's the quote for the day. I think we should close it out on that. The more you know about money, the more you can make.
The more you can make. And the more you respect it, the more that you can make, the greater profit you can turn. So it's all about respecting money. It's all about keeping that balance and tracking and knowing exactly what you need to file and when to file. Bev did, again, put the blog in the comments, so be sure to check that out. And if you do have any questions, please leave them in the comments either right now or after the show. Doesn't really matter, and we will try to tackle those the best that we can, or at least point you in the right direction.
Yeah, and John says, when I'm doing 20 in Club Fed, you will still be my friends. Laugh out loud. Oh, great. Yeah.
Just don't call me collect, John.
Yeah. Well, hopefully when you're making like $1 million because of our advice, we'll also still be your friends.
Yeah, exactly. So thank you, everyone, for joining us and tuning in today. And if you found this episode helpful, please share it. It's the best thanks that we can get for our time and for being able to just share this advice with you, and hope that it touches you in such a way that it motivates you and helps you build your business and your reputation just a little bit more.
Yeah, and we'll see you guys next week, 10 o'clock Mountain Time. Erin is going to be talking all about the ketogenic diet next week. Did I say that right? Ketogenic diet?
Yeah.
So she's got a great article coming out on Wednesday, and we're going to talk all about it on the show. So if you want to learn more about ketogenic diets, how to do them, who they're for, who they're not for, I'm going to be interviewing her all about that. She is our keto expert. So thanks for joining us today, everyone. We'll see you next week.
Yes.